Hey guys, Mike here. So obviously inflation data was a disaster Friday. That's why the market sold off big time. And, obviously people already knew about that Thursday. A lot of people did. That's why they sold off Thursday as well. But this week, Jerome Powell speaks after the Fed meeting. And I think there's only one thing the market is waiting to hear. And that's whether or not 75 basis points is back on the table. Remember, he had talked about it wasn't on the table right now. But seeing inflation continue to increase, that whether or not they're going to try to get to a neutral rating faster or not, and because they're already on record pace to get to a neutral rate, right, and get us to 2.5%, 3%, whatever it is, the number they're picking here. And remember, we hadn't even begun to feel the effects of them rolling off their balance sheet. That just started this month, and so we don't know really what that's going to do to the market yet. I can tell you right now, it doesn't do anything good for it. Let's just put it that way. But I think everybody's in a way focused on the wrong thing. They're focused on well, when are we going to finally see peak inflation? And they keep thinking it's supposed to happen 2 months ago or whatever. But the truth is, remember, this is a worldwide economy, okay? Prices in some areas have been coming down, actually, right? Input costs. But we hadn't felt it. We hadn't seen it in the grocery stores, right? In the clothing stores, online shopping, anything like that. And so, and also looking at what's coming up. Let's look the next month, right? Which one I'm focused on in this one is looking at what the CPI data look like next month. Show you, where costs are actually been coming down, but we're not feeling it yet. So it hadn't gotten through the system, right? And then also look at, one sector you can look at and say, oh, okay, this is what the Fed wants, but you still don't see the prices coming down yet, right? Even with demand destruction. Okay, and I'm going to show you that. So think about what's going to happen next month. Crude oil, obviously, still going up. And if you look, we're almost halfway through June. And what do you see? June compared to May. It's higher, right? And you sit there and you go over to natural gas. Look at that. Still trending up. What do you see in June right now? June is higher than May. Okay, and so again, almost halfway through. And then what else we got? Gasoline. This is actually wrong because gasoline in the United States is almost, I think it's an average of $5 a gallon now. But you can see June is definitely higher than May so far, right? And we're halfway through. So unless there's a huge correction in all of these, the overall inflation, because obviously oil affects everything anyway, food costs and everything else, is going to absolutely, that top number is definitely going to either be the same or higher, it looks like, at this point in time. And if you look at these costs right here, somebody sent this to me in our membership and stuff, and you can just see right here to the left, you see prices dropping, right? And so you see in the middle, the shipping index coming down. Yeah, you look at the North American fertilizer index, it's been dropping, right, over the last few months, yet you don't see it at the register anywhere, right? You're not feeling that. I don't think anywhere. And really, it's just because, this is a big economy right here. It's a worldwide economy, and it's going to take time to work its way through the system for us to see it. But the real question is it a couple months? Is it many months? Is it years? Is that what it's going to take for this to happen? And that's really the big question I think people need to be more focused on. But the good thing is we can kind of get a glimpse, because there's a report coming out next month on a certain sector, and that's the real estate industry, right? It's the one sector out there that's really, you've seen this almost like experiment happening where, the Fed has been raising rates. So what's happened to the 30-year mortgage? Up, right? But demand was so high, what's been happening? It's been driving the prices up because of low supply, right? And so that's why some people make the argument this isn't a demand issue, it's a supply issue, right? Whether it's, I don't care if it's food, oil, whatever you name it, there's not a huge supply out there and demand is high, right? And so the question begs a difference. You can see right here when I'm talking about demand destruction, which is what the Fed wants, by the way, you can see U.S. existing home sales have fell off a cliff over the last few months. And then you got sales for newly built homes tumbling 16% in April, even though prices are obviously still soaring, which is what's pricing people out. And so you would think prices would come down, which they have not yet. And again, we'll get that report next month. But you can see here's the major building materials, right? And you got copper, steel, drywall, lumber, and such, right? And don't forget to hit that like and subscribe button, guys, if you get something out of this. And when you look over here, obviously copper has done a major pullback, right, recently. And so you got that happening. And then you have steel rebar. That right there has done a major pullback as well. Actually, that happened last year. And then you have lumber, of course, I've showed you before, it's done 2 major pullbacks. But the home prices, just continue to go up. And so we're going to get to see how this works, right? We've seen demand destruction because now people either can't afford it or get qualified because the price has gone up so much. The 30-year mortgage interest rate has gone up so much because the Fed is raising interest rates, right? And so you're seeing that demand lowered. You can see by the sales of all existing homes right there, whether they're new or old. But the thing is, the X factor we got to figure out is the supply side, right? There just isn't a lot of homes out there, not like there have been in the past. And so is there enough demand destruction to start building up that supply side, and how fast will prices drop? That is what I'm really eager to see, especially when the next report comes out showing the second quarter, is how much do we drop, right? And do we drop at all? If we don't drop at all, that's not a good thing. Okay, but this is going to give us an idea at least to say, and I know houses aren't food or anything else, but at least it gives an idea to say how long does it take for stuff like this to work through the system. Okay, because again, the market is doing the Fed's job in this one sector. Okay, now as far as the shipping costs and all that other stuff and oil and everything else, that's what's going to help try to bring down food costs. Hopefully, we shall see, which is what Americans really need. And I know, obviously the Fed, they look at core, which takes out food and energy and stuff like that. But, the core didn't come down either. And so it's going to be interesting to see what their decision is this week. A couple of things to watch for is, one, or a couple of stocks they did. I would say 3 stocks really to watch out for is going to be one, Apple, which is $2.2 trillion market cap, because it's sitting at a major support around 137, right? And hadn't dropped through this since July of 2021. So it's been close to a year. And if it does, you can see the MACD almost trying to roll over down there. But if it does, you could see Apple go all the way down, almost another 10% down to 125. Then you got AMD right here in this obviously downward trending channel right there, and it's sitting at a major support level of around 94. And if it falls through that major support level right there, you can see it takes us right back down into that channel that it traded in for almost 10 months. And so it could drop all the way down to 75. So those have been dollar cost averaging in, you can have a shot to get it even lower if it breaks through this channel and that MACD actually rolls over, which of course will probably drag down the whole semiconductor sector even more. And so we're very high up in this channel, as you can see, and it's bounced off that channel 4 times at the top and bounced off it at the bottom around 4 or 5 times as well. And so we'll see how that one goes. And then the last one to look out for is ARK, because just a lot of people get into this one, but it holds a whole lot of different stocks. And you can see, obviously, in this downward trending channel that it has respected so far. It is actually sitting at $40 right now. But right below that, it seems like a long way down, is 33. And 33 is key because that takes us all the way back to the bottoming out of the 2020 crash and the bottoming out, if I draw this line over even farther, of the 2018 crash. And so that is a key level that I could absolutely see it reaching this week if the market continues to sell off and those MACDs actually roll over and take us down even further. And I know 17% seems like a lot, but for an ETF like that, it's not. I mean, look how far it's down already, and the kind of stocks it holds, unfortunately, in this market has not been doing well. And, again, if Apple breaks 137 and heads down to 125-ish, whatever it is, and in that channel, it's going to bring all the rest of the FANG stocks down with it. You can bet money on that. And all of this depends, again, on Jerome Powell and what he says. Like if they put 75 basis points back on the table and hint, because they try not to surprise the market, that they're actually going to start tightening even faster, yeah, the market's going to sell off. There's just no other way around it. It makes no sense not to, right? Because you're literally telling them we're going to drain the punch bowl even faster than we were. And what do we know the market is? It's an addict. It depends. And what does it fix? Liquidity, right? Free money and stuff like that, right? And so I can't imagine we're coming out of that downtrending channel. That's just the way it is, guys. So the good thing is, if you're, a dollar cost averager into a lot of stocks you picked, you'll probably get unless something crazy happens during the Fed meeting, you might get a lot better chances coming up here to get even lower price targets, all right, for what you're trying to buy there. And so, and if you're a trader, you're going to be happy because the volatility is going to absolutely just skyrocket and be all over the place. So, you know, good times, right? I mean, but that's just what we got to understand is as long as you look at those channels, as long as we're in that downward trending channel on all, I can show you 100 stock charts like that, every index is like that, then that's where we are. But if you look at what people are doing like in the VIX, I mean, option wise, I mean, people are buying a lot of calls. I'm talking about thousands upon thousands. And when you look at the number, I think some of them were buying like in the 50s or something like that for the VIX, which is way up, right? I mean, that's extreme. Rarely does it ever go over 45 unless we're in a major crash. But, you know, people are just hedging up. You know, that's what's happening. And so that's usually what happens when Jerome speaks. So we're going to have to see what happens. And I wish I knew, but who the hell knows, right? What's going on? The sure bet is we're heading down farther to test, you know, 3,700, 3,400 on the S&P, which is what everybody seems to want to look at. The NASDAQ is still way down at this point in time and will remain down for right now unless we get some news of some kind. We'll see. But just want to put that out there to you. You know, let me know what you think about that and stuff. And, you know, how long do you think it's going to take once we finally peak to actually see the prices start to come down that affect the everyday Americans? Okay. So hope you have a good one, and I'll see you later.